Well, welcome to this week's Cattle Call. I'm Susan Littlefield, and we took a week off for the holiday. And having said that, markets have not gotten any exciting as we are now fully into 2022. We're going to take a look at a variety of different things, including the disappointment we're seeing so far. And I know you're going, Susan, it's only the first full week of January, but we've got some reasons behind that thought. And we'll look at comparing what we see a year ago, especially when it comes to the slaughter capacity and things happening at our packing plants. Weather pressure as well. It has been pretty good up until this point. What does that mean for the cattle industry? We're going to dive into that and more with Brad Koima, as you can see him. He's joining you. He's with Koima and Varlick out of Sioux Center, Iowa. And let's start out with this disappointing year so far. I know it's only the 5th of January, but having said that, there is some disappointments, Brad.
Yeah, for sure. I think if we'd done this program a week ago, I'd have said I think that coming into the first full week of January, you're going to have a packer that needs to buy some cattle. Got a full week or 2 or 3 or 4 in a row of slaughter, right? We don't have that holiday shortened business. I would have thought cash would have been fully steady to higher, and frankly, I thought that this yesterday morning yet, but. Now with the pressure on the board and the soft basis that it is, we did see some cash leak today at 138 in the south. There was just a tiny bit of 140 this morning. You had to kind of be quick with it. But there's cattle that traded at 139, which isn't by any means a disaster. I mean, the market was mostly 140 last week. So, but compared to what expectations were, at least for some of us, it's a bit disappointing. It's not just a little bit disappointing too, Susan, that the lack of leadership again in the futures market. We're supposed to be trading futures as in like tomorrow or next February or next April, right? And we continue to lag behind cash. Typically February would carry a premium to cash, and this year it's a $2 discount. I guess we've explained this over and over. I don't have a lock pipe cinch on exactly why it is, other than the fact that you having a hard time recruiting the long speculator. And I think you also have a speculator that's in some ways left our market because of the uncertainty stuff like the COVID issues and different things like that, and maybe even economic issues has kept some of the long speculator away from the market, at least in the front end of the market. Now, it seems like the long speculator is happy to go run to the back months. And we've talked about how long-term we like the market here too. But
Well, let's talk about that COVID issue and what are you seeing when it comes to a packer standpoint? I mean, I haven't heard a lot of numbers coming out of the plants, but you got to assume that there's some issues there with some absenteeism.
There is, and I'm afraid that's this week's fundamental issue, the negative issue anyway. Our slaughter has been disappointing so far the first 3 days, and today is no different, 116. Not that that's horrible, but prior to the holiday deal, we were doing 120 to 22 pretty consistently, which is kind of right at, I would say, as close to being an efficient harvest system as you're going to get. So yes, there's a terrific amount of absenteeism I'm hearing, and I think it's probably legitimate. I mean, around here, there's a lot of people that it doesn't seem like we're having serious symptoms this round here, but there's a lot of people missing. I know even from talking to the local schools and stuff like that. So I guess it's real, but now I would also caution, I guess, to say that I don't think this is like it was when we were first trying to figure this out, right? Most of this workforce has been vaccinated, so if they're getting symptoms, they may even be asymptomatic, but they're not severe. They're not out for weeks at a time, months. So I'd like to think that this is a short window where we got some trouble with it, but it's real. We're not getting quite enough data. I don't think anybody should be worried that we've backed up a whole bunch of cattle yet, but yeah, that's the market. You worry about it.
Are we going to continue to trade at a discount?
I'm afraid we probably will. Now, if we would all of a sudden spin up the weather, that might change things. Yeah, it's cold, but it's dry. If the weather would shift, particularly if the Kansas part of the Kansas, Texas, if that area would happen to finally get some moisture, some snow, that might give the February cattle a little more impetus to rally. But at this point, it doesn't really seem like there's any real threatening weather on the horizon.
But the weather that we are dealing with, the fact that it has been warm in some areas up until this week, we're seeing 50s. That's some perfect growing weather for these cattle.
You're right, and that's bearish. Okay, short term. Because what you're finding out is that these cattle are really, really performing well. I've had the same experience. Give you an example. This would be the time of year where North would have yearling type cattle, right? I know I and others have sold a lot of yearling cattle already, exceptionally early. Some of it because these cattle went on early because it was dry. Out of the Dakotas, eastern Montana particularly, they ran out of grass early, so we placed them early. They grow much, much quicker in a feed yard than they do out on grass. And now all of a sudden, cattle that would have been maybe a February cattle are dead. Okay, that's friendly down there. Now, right now, it means we've got some cattle for sale. But, I don't view that as being a negative at all. In fact, when I weigh that against everything else, I think that that's actually a positive.
What about for the boxes? I mean, a bottom is in place, you think, at this point?
I do for now anyway, unless something comes along. It typically seasonally this time of year here, when you get after, well, usually the demand stays pretty good until about 10 days to 2 weeks before the Super Bowl. Then you get into kind of this doldrum type thing, right? You always hear this story of, well, you've got the holiday spending, yada yada, but you probably don't have the outings, you don't have the cookouts in February, right? I mean, we do, but I mean, most normal people don't, right?
Right.
And so it wouldn't be uncommon to see a bit of a slowdown. Now, having said all that, demand for this beef product is great. It's good here in the United States. It is outstanding globally. So I'd say don't let them kid you. I think that I'm not worried that the demand side of this market can't hold its own. So let's get these numbers good and current so we can get the packer to come back after us here like we did to them for the last 6 to 8 weeks and see once. I don't think that there's enough cattle in the north, not in my country, to really wreck the market. So maybe we trade from 135 to 141 or 2 for a little while, and then maybe get deeper into the late springtime and do something better than that. But something like that would fit at least my way of thinking.
All right, sounds good. We'll catch up with you next week, Brad.
Sounds good.
Joining us has been Brad Koima this week on the Cattle Call, and as always, remind folks that commodity futures and options do involve a substantial risk of loss and are not suitable to all investors. And that is the Cattle Call. I'm Susan Littlefield.